Hello and welcome back to the Rekt Capital channel, and welcome to today's video about the 10 things that I wish I knew when I first invested in crypto. And let's dive right in, because the number one thing that I wish I knew is Bitcoin market cycles. I wish I knew about the Bitcoin market cycles because when we look at Bitcoin's price action in terms of its history, its historical price behavior, we have to understand that we can divide this price into three different stages. We have a ranging period. This is typically where we see some accumulation from bargain hunters, and then after this ranging period we see a new uptrend to the upside, which is essentially a new bull market. And whatever dips we see in this bull market, in this huge uptrend, these dips are essentially very good buying opportunities. These are very good financial opportunities for investors to just buy into the uptrend after a period of short-term weakness and then see price appreciate towards the upside. So these dips in a very strong macro uptrend, which lasts a few years, this is a very good financial opportunity for investors who missed out earlier. And after an exponential bull market, we tend to see a strong retrace just to correct for that over-optimism, to correct for that over-exuberance in the market from the bull run. We have this sort of strong downtrend, a correction. So we see very strong downtrends to the downside, but these dips are no longer good investments. That's very important to understand, that these dips are merely short-term relief rallies, which essentially these are investors that are getting tricked by the market, thinking that they're buying into strength, but they're actually buying during a correction. So these are just short-term opportunities for Bitcoin's price action to appreciate only in the short term, only very briefly, before actually continuing to new lows. So we see a lot of relief rallies in a bear market, and this is essentially where investors really do experience relief after prolonged downside, because whenever we see straight candles, weeks and weeks of price dumping to the downside, once we see a relief, a few weeks of relief to the upside like we're seeing here or here, investors start to truly feel relief. Wow, it's so great to see price finally go to the upside after weeks and weeks of negative downside price action. So it's super important to understand these Bitcoin market cycles because they are very important and they're cyclical. When we think about market cycles, they cycle. So we see a ranging period to a bull market, a bear market, and then a ranging period again, followed by a bull market. And though we're in a bull market right now, we're enjoying a Bitcoin bull market, we're also going to see a bear market in a few years' time. That's just the way the markets work. They just cycle. And the thing about market cycles is that we see bargain hunters buying over here, buying when everybody is fearful. So the market is fundamentally fearful, skeptical, hesitant, uncertain about Bitcoin and cryptocurrencies. And then we start to see some hope. We start to see some belief in the crypto space, in Bitcoin. We start to see some people start to FOMO. They start to feel the fear of missing out because they're starting to see that there is some uptrending price action. There is money to be made in the Bitcoin market, so they don't want to miss out on that opportunity. So we see varying stages of FOMO right over here. People buying into these green candles, they're buying at higher and higher price levels. They are FOMOing. So we see varying degrees of FOMO as the cycle progresses. And of course, this is the most extreme form of FOMO. People essentially buying the top, buying Bitcoin at 20,000. This is where people FOMOed. And unfortunately, the people who FOMOed here lost their money because of course we saw a strong downtrend afterwards. So it's so important to understand that the market cycles because human psychology cycles. We as humans are predictably irrational, and in certain circumstances we're always going to behave the same way. We're not going to buy when price is on the low end. We're going to buy when price is at the higher end because we FOMO, we fear that we're going to miss out, and of course we get greedy near the top. That's just the way psychology cycles. So essentially speaking, one market cycle is essentially greed and then fear. Greed and then fear once again. it cycles into a greedy bull market and then it cycles back into a fearful bear market. So it's so important to understand these market cycles because they can inform your trading and investing strategies so that you can become more profitable and avoid moments in the market where you can actually lose a substantial amount of money. So this part of the cycle is for accumulation, this part of the cycle is for profit maximization, and this part of the cycle is for capital preservation. So the market cycles invite different strategies, different trading psychologies, and it's very important to know about these market cycles so that you can tailor your approach accordingly. And if you'd like to learn a bit more about Bitcoin market cycles, click in the right hand top corner where I talk about Bitcoin being in this bull market based on these market cycles. And the last thing that I want to mention about these market cycles is that every time we see a bear market, we tend to see similar retraces. So this was a 93% retrace from the highs of the bull market and to the lows of the bear market. That was a 93% retrace, but then in the next bear market, we saw minus 80%, and then we saw minus 86%. And then most recently in mid-December 2018, we saw a bottom to an 84.5% bear market. So essentially speaking, it's very interesting to see how we're seeing a recurring theme in these market cycles. We're seeing Bitcoin bear market retraces of around 84.5%. And the very interesting thing here is that this recent bear market was actually 84.5% deep, which is essentially the average retrace percent across all retraces. 84.5% is the average retrace across all bear markets, and it's super interesting to see the sort of cyclicity in Bitcoin's retraces because essentially this is all down to the psychology of the market participants investing in Bitcoin. So if we just look at this Wall Street cheat sheet, and this is the sort of psychology that I spoke about earlier on, you see this disbelief, and then you see a bit of hope, you see optimism, then you see belief, and then thrill. And so you see all these varying different degrees of FOMO, people fearing that they're going to miss out, buying at higher and higher and higher prices, all the way up to buying at the most euphoric peak before seeing complacency and anxiety, denial, panic. So it's very important to understand the market phase and the psychology underpinning this market phase, because if we just have a look at this bear price action on Bitcoin, we see that the bull market of 2017, or at least 2015 to 2017, and then the bear market that followed, if we just overlay the Wall Street cheat sheet on top of this price action, you're going to see something truly fascinating, because look at this. Look at how the Wall Street cheat sheet is aligning with Bitcoin's price action. It's phenomenal. Look at the precision here. It's just unbelievable, because like I said, market cycles are fundamentally governed by human psychology, and this is a very true testament to that, because we're seeing how the psychology of a market cycle, the Wall Street cheat sheet, how well it overlays onto Bitcoin's price action. It's pretty amazing to see this, but fundamentally it's all about the psychology in these market cycles, and this is why we're seeing it. So let's move on to point number 2, what I wish I knew before I invested in Bitcoin. Of course, point number 1 was a very long introduction, but it sets the tone for this entire video because now we understand the market cycles. So point number 2, hodling as it's known, hold on for dear life, a meme in the crypto space, that we need to buy Bitcoin and just hold on to it. That's not necessarily a good strategy, and that's something I wish I knew before I invested in Bitcoin, because if we look at these ranging periods, if you buy here and you hold on for dear life, then of course it's a fantastic strategy because you hold through all this volatility in the bull market. If you see a dip, you don't do anything, you're just holding, and you hold to higher price levels. So that's a fantastic strategy in a bull market. But in a bear market, look guys, it's not a really good thing to do because we see relief rallies before we see newer lows. So hodling in a bull market is a fantastic thing, a fantastic investing strategy, but holding in a bear market will just lead to financial ruin. And point number 3 regards another meme in the crypto space, BTFD, buy the dip. essentially speaking, there's no point in buying the dip in a bear market because, of course, if you buy the dip, you might see that the dip gets deeper and it falls to deeper and lower price levels every time. So, of course, buying a dip in a bull market is a fantastic strategy because we see uptrends happen. We're seeing price go to the upside, price appreciate all the time, and these dips are very good financial opportunities. So buying the dip in a bull market is a great trading strategy, but not in a bear market. Of course, if you're fortunate to buy the beginning of a relief rally, then that's all well and good, but essentially speaking, buying into a strong downtrend by trying to buy the dip is very bad. It's just very bad for your portfolio, and it's the best way to just shrink it to a number that's closer to zero. So definitely something I wish I knew before I invested into Bitcoin, to know that buying the dip is only a good strategy in a bull market and not in the bear market. And point number 4 is the money flow cycle in crypto, because money flows in a very specific way in crypto, and we need to understand the psychology that governs this money flow cycle. So essentially speaking, right over here we start off with fiat, so that could be USD, euro, or the pound, the British pound. Whatever fiat currency you're starting off with, you're probably going to be buying Bitcoin, whether that's on Coinbase, whatever exchange you're buying Bitcoin on, you're always going to first start off with fiat. And then once you have Bitcoin, you might find out about different altcoins. And these altcoins come in different shapes and sizes. You have large cap altcoins like Ethereum, you have mid cap altcoins, low cap altcoins. You have different types of altcoins, and the way that money flows in crypto is that once you have Bitcoin, people start to buy large cap altcoins because these are the first altcoins you start to learn about: Litecoin, Ethereum, Dash, Monero. These are the sort of altcoins that will probably appreciate more in price than Bitcoin will over time, but they're still relatively stable when we compare them to much smaller altcoins like mid-cap altcoins or even low-cap altcoins. So these large-cap altcoins like Ethereum and Litecoin, these are where investors learn about these coins, they learn about altcoins, they get a bit of a taste of different profits and these exponential rallies in altcoins, that they start to learn about mid-cap altcoins, which are slightly smaller, but they have a higher risk profile. Mid-cap altcoins have the potential to rally even more to the upside than Ethereum, for instance. They have a higher risk profile, but they have a higher prospect of return as well. And small cap altcoins, well, they are the ones that rally the most. At the end of the money flow cycle is when we see small cap altcoins rallying exponentially, doing 2x, 3x, 10x even in a bull market. And then once we see all these small cap altcoins rally, then we see people starting to sell off into Bitcoin. They sell, they protect their profits, they book their profits from this money flow cycle, and once they're in Bitcoin again, they'll stay in Bitcoin for a brief while before selling their Bitcoin into fiat, and then that's the end. That's the official end of the money flow cycle. So I've created this illustration just to visualize it a little bit better. Hopefully this illustration will help you visualize the money flow cycle in a bit more detail with a bit more clarity, because if we have fiat, we'll buy Bitcoin, we'll use this Bitcoin to buy Ethereum, Litecoin, and once we see these sort of gains, people tend to go to smaller altcoins and even smaller altcoins. And of course, as you go down, the risk increases, but so do the potential prospective returns and gains. So once we see low cap altcoins rally towards the upside, that is essentially the end of the altcoin cycle, and then people sell to Bitcoin once again. And of course, if Bitcoin is to rally, people might hold on to Bitcoin, but if we're seeing a bear market or a downtrend on Bitcoin, people will sell into fiat just to book all their profits from crypto. So that's the psychology of the money flow cycle. I wish I knew that before I bought my first Bitcoin, because this will help you navigate alt seasons, which is point number 5. Point number 5 is when to time alt seasons, because when I first invested in Bitcoin and then I learned about altcoins, I didn't know what alt season was. So once I learned what an alt season was, and that was essentially that all altcoins are rallying towards the upside, so essentially all of these large cap, mid cap, and small cap altcoins are rallying, and you're seeing exponential rallies and gains to the upside. Once I learned about the fact that that is an alt season, I wanted to actively trade that alt season, and of course I did that. It's just I didn't know when this alt season begins and when it ends, and why does it begin and why does it end. So of course, knowing the money flow cycle gives you that answer. It gives you the answer as to why we see these alt seasons, but it doesn't give you the answer as to when should we exit, when should we start accumulating altcoins, and when should we sell them. So this is my alt season checklist. When Bitcoin rallies, that's something that we need to bear in mind, because when we see Bitcoin consolidate, money begins to flow from Bitcoin to large caps like Ethereum. And then once Ethereum starts to rally and then it breaks its long-term gauge of investor sentiment, such as the 200 daily exponential moving average, that's when Ethereum and other large caps tend to follow and they rally towards the upside. During this time, we probably see a decline in Bitcoin dominance. That's something that I'm going to talk about in a bit more detail in just a second. And that's when the money flow cycle happens altogether. So understanding these alt seasons is something that I wish I knew, I understood when I first bought my Bitcoin, because we have to understand that when Bitcoin is rallying, Bitcoin dominance is increasing. So this is a weekly chart for Bitcoin dominance, which essentially shows us the dominance, the market dominance of Bitcoin in the cryptocurrency market. So right over here, you can see that Bitcoin dominance is 50%. And if it's increasing, then people essentially are buying Bitcoin. People are buying Bitcoin, so Bitcoin's market dominance is going to be increasing. But whenever we see a decrease in Bitcoin market dominance, that means that Bitcoin is losing its market dominance. And what does that mean? Well, it means that Bitcoin is suddenly being sold into either fiat or into altcoins. And this is where we start to see some rallies in altcoins. Whenever Bitcoin's dominance starts to decrease, we start to see the market dominance of altcoins increase. And this is a fundamental relationship that I wish I knew and got used to at the beginning of my crypto journey, because understanding these fluctuations in Bitcoin dominance and altcoin dominance, this would have helped me really navigate the alt seasons much better, know when to enter and increase my exposure to altcoins, and know when to decrease and exit the altcoin market altogether. So understanding these fluctuations, increases in Bitcoin dominance and decreases in altcoin dominance, and then decreases in Bitcoin dominance, and by the same token, increases in altcoin dominance. So there's an inverse relationship that you need to get used to when it comes to altcoins and Bitcoin, and I talk about how to time alt season in one of my articles pinned in the description down below. And essentially in that article, I talk about how to time alt season based on these trends in Bitcoin dominance. But the principles remain the same. If we see Bitcoin dominance increase, then of course altcoin dominance will decrease and the prices in altcoin valuations will also decrease. But if we see Bitcoin dominance decrease like this, or even like this, if Bitcoin market dominance is decreasing, then altcoin dominance is increasing and the valuations and prices for altcoins are increasing market wide. So check out my article if you're interested in learning about timing alt seasons, because that's definitely something I wish I knew at the beginning of my crypto journey. Point number 6 are the altcoin hype cycles. If we have a bull market in Bitcoin, then we'll have a bull market in altcoins. And the way to think about altcoin valuations increasing and decreasing is to just divide the entire year into quarters. So the way we think about this is quarter 1, quarter 2, quarter 3, and quarter 4. And the reason for these altcoin hype cycles, and I'm going to write an article about this in the future, so definitely subscribe to the channel if you haven't. I'm going to post a video about this as well. The reason for these hype cycles is that at the end of every quarter, the altcoin projects tend to make announcements, they make updates, they tend to release mainnets. They make huge fundamental changes that they announce to the world, and that's essentially when we start to see a very interesting psychological phenomenon of people buying the rumor Once there's a rumor of some huge development for a project, they buy an altcoin. For instance, let's say Ethereum has a very interesting thing coming up at the end of Q1. So people start to buy the rumor around here, and then Ethereum's price appreciates towards the upside. And then people sell the news once that update is released, which is a little bit counterintuitive, because if Ethereum improves as a result of its major development or update or whatever the case may be, shouldn't price continue to increase to the upside? That might be true on the longer term time frame, but the fact of the matter is, in reality, in the short term, people just sell the news and price begins to depreciate after that quarter. And that's a bit unfortunate, because many people don't know that these altcoins enjoy hype cycles during a bull market. So we tend to see buying the rumor and then selling the news, and then buying the rumor before Q2 and then selling the news around Q2. And then we start to see decreases in altcoin valuations before people buy the rumor and sell the news again. And we see these hype cycles recurring throughout the year, every quarter, and it's just really important to know when to buy altcoins and know when to exit them, because tying in with these hype cycles come different trends in Bitcoin dominance as well. So you can see how all of this is piecing together and really forms a broader picture of understanding, and it really does give you an idea as to why I wish I knew this when I first started in crypto. And point number 7, just tying in with this, never FOMO, because of course if you FOMO when people are selling the news, then you're gonna lose a lot of money, unfortunately. So if you want to FOMO when people are buying the rumor, when they're buying the rumor, when they're most fearful and people don't want to buy at that time. FOMO then. But the point I'm trying to make is never FOMO in general, because people tend to FOMO when everybody is greedy, and when everybody is greedy is when we start to see sell side action in altcoins as well as in Bitcoin. So never FOMO. There's always going to be another trade out there or investment that can offer you some sort of profit potential. There are 5,000 cryptocurrencies in the space, guys, so there's no need to FOMO. There's always going to be a trade waiting for you somewhere. Just have that abundance mindset, because there truly is abundance in crypto. With 5,000 cryptocurrencies out there, I'm sure you can find one for you that will make a profitable investment or trade. So it's very important that if you feel the urge to FOMO, don't. Just remember that you can always find a better trade setup or investment where people are feeling a little bit fearful, they haven't yet bought the rumor, and that's when you could potentially start to scale in to your altcoin before seeing nice gains once everybody starts to get greedy and starts to FOMO themselves into the market. So point number 7, never FOMO. There's always another trade out there. And let's move on to point number 8. If we're looking at all these hype cycles, these are essentially driven by fundamental analysis. So essentially news, updates, developments, mainnet releases, all these interesting things that projects have going for them. I have to say that none of this matters in a bear market. So point number 8 is fundamentals don't matter in a bear market, because whenever we're seeing these retraces market wide, whenever Bitcoin and altcoins are enduring an 80+% correction for many weeks at a time, fundamentals don't matter. All these projects are going to lose valuation, and some projects will disappear entirely. They just won't survive that winter. They won't survive that bear market. But the projects that have survived the bear market and they've been able to navigate it and just work through it and continue to hustle and deliver, those are the projects that are going to really excel in the bull market that follows. Because after all, after every bear market, we see a subsequent bull market. So if those projects can survive this altcoin winter, this extended bear market, this bear trend, the strongest projects will prevail and they will excel in a bear market. Very much like natural selection, that's just the way it works. But we have to bear in mind that fundamentals don't matter when every single project is in a bear trend, because every single project will most likely lose over 80% of their valuation. So it's very important not to hodl. This ties in with a few points from before. It's important not to hodl in a bear market because all altcoin projects will simply deplete and shed valuation. And this ties in directly with point number 9, take profits. Nobody got poor from taking profits. And the thing is, if you don't take your profits and you get a little bit too greedy, then if you don't take profits, you won't have any. And that's the very sour side of crypto, that if you've seen profits in a bull market and if you enjoyed a substantial increase in your portfolio has grown 10x or 5x or whatever the case in a bull market, it's really important to take some profits every now and then. Pay yourself. Pay your lifestyle, because after all, what are you in crypto for? You might be in it for the tech and it might be the future financial revolution, but at the same time, we have to understand that you can make a lot of money from crypto. The volatility is there. It's very conducive to making a lot of money from those swings. So it's just important to understand, why are you in crypto? Of course, if you're investing, then you want to see a return on your investment. So why wouldn't you book some profits just to treat yourself and reward yourself for a good investment made? Treat yourself every now and then, book profits when it's time, because once we see a bear trend, you will simply lose all those profits, and that's a terrible thing to do. So my point here is always take profits, whether that's a small portion or a larger portion. Always take profits in a bull market, because you want these profits to stay with you, right? You don't want them to wither away once the bear trend strikes, or whether a retrace within a bull market starts. Because if you see a retrace in a bull market, then this is a short-term retrace which will probably take a little bit of valuation from your altcoin positions, but ultimately, most likely, those altcoin positions will recover afterwards. But having said that, it's very important to have that consistent profit taking strategy, because you want to pay yourself, you want to fuel your lifestyle, because after all, unrealized profits will tease you into an illusion of having a better life, of having a Lambo, but it's only realized profits that will actually get you a better life. So that's just something to bear in mind, something I wish I knew before I bought my first crypto. Always take profits, because it will be worth it. That's essentially my point. And the final point in this video is point number 10, portfolio diversification and risk management. And it might sound like a mouthful, but the whole idea here is to not go all into altcoins we're in a bull trend, because of course all altcoins are fundamentally pegged to Bitcoin. So whatever Bitcoin does, altcoins will follow. So if Bitcoin is slightly retracing, altcoins will lose their valuations as well. So it's very important that if you have a whole portfolio in altcoins, then you don't have anything to hedge against. You're just going to lose money. So it's very important to have a stable portfolio, a diversified portfolio where you have some fiat in there, you have some Bitcoin, and you have some altcoins, because you have to have a fiat buffer, whether that's euros, pounds, or dollars. You have to have that buffer just in case Bitcoin retraces in a bull market and you want to accumulate on that retrace. You want to buy the dip. So that's always a good idea, to have a bit of money set aside just in case that happens. But at the same time, you want to have Bitcoin as the core of your portfolio, your crypto portfolio, that is, because fundamentally Bitcoin is the king of crypto, and whatever it does, altcoins will follow. So if you have 100% exposure to altcoins and no Bitcoin and no fiat, then you're probably going to lose a lot of money during Bitcoin uptrends. And that's just a shame, because you want to enjoy the Bitcoin uptrends. So just buy Bitcoin, have a bit of fiat, have a bit of exposure to altcoins, have a diversified portfolio, because at the end of the day, this is a very good way to just manage your risk effectively. Enjoy the Bitcoin uptrends, enjoy the altcoin uptrends, know when to enter altcoins, know when to enter Bitcoin, and just keep a diversified portfolio. Don't go all in to altcoins, because Bitcoin tends to rally as well. Always keep a fiat buffer just in case Bitcoin dips. And those are just some of the things that I wish I knew before I bought my first Bitcoin when it comes to portfolio diversification and risk management. So that's about it for this video. I hope you enjoyed it. Those are the top 10 things that I wish I knew before I bought my very first Bitcoin. If you like this video, please leave a like, subscribe for more videos like this. Of course, I'm more than happy to keep on producing content like this on a daily basis, as long as you find value in it. So subscribe for more videos like this. this, click the thumbs up button to like, and I'll speak to you in the next video. I'm Rekt Capital, and I'll speak to you soon.